Good evening and welcome to Biz at Sunset, where we bring you a wrap of the hottest business stories from China through the week. I'm Manoj Kevalramani, filling in for Kylie Purcell. It was the fifth consecutive week of gains at the stock markets in China. The benchmark Shanghai Composite Index gained around 4.4% in the week, closing at 4,034 points. Meanwhile, the CSI 300 index, which is home to the largest listed companies in Shanghai and Shenzhen, gained 4.2% through the week, closing at 4,344 points. Both indices reached their highest levels since March 2008. But the gains were not just limited to the markets in the mainland. Stocks in Hong Kong also surged this week, with the Hang Seng Index also hitting a 7-year high to end on Friday at 27,272 points. Among the biggest reasons for the gains in Hong Kong was the amount of money pumped in by investors from the mainland through the Shanghai-Hongkong Stock Connect program. In fact, there were at least a couple of days in this week when mainland buyers exhausted their daily investment quota of 10.5 billion yuan. Equity investments, however, require capital. But if you are a fresh graduate in China, then you're probably wondering which sector offers you the best pay package to be able to make some of those investments. Well, according to a new survey by a leading recruitment website, 51job.com, graduates and master's degree holders in the finance sector have the best prospects. They can end up making anywhere from 10,000 to 17,000 yuan as starting salaries. Following close are graduates majoring in engineering. Their initial wages reportedly can range between 8,000 to 10,000 yuan. The 51job.com survey covered over 2,300 respondents and around 293 companies. Among its key findings were that starting salaries for fresh graduates this year are generally 10% higher than those in 2014, and that employers are now starting to pay more attention to the productivity of the employees rather than their educational background. And finally, we move from the field of markets and salaries to the football pitch. Well, sort of. 4 Chinese companies, beverage maker Wahaha, real estate developer Wanda, telecommunications giant Huawei, and e-commerce firm Alibaba are reportedly in the running for the takeover of the Italian football club AC Milan. That's according to the Vice President of the Italy-China Chamber of Commerce, Fu Yixian. What's more, Fu says that there is a crowdfunding initiative that's been launched to seal the estimated €1 billion deal. Fu has been quoted as saying that a consortium formed by several big companies will pay half of the €1 billion and the other half will be raised through a crowdfunding campaign, with one share expected to cost no more than 10,000 yuan or around €1,500. That's it from me. Hope you have a wonderful weekend.